Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, and welcome to the January 11th, the Lovie Smith Coach of the Year episode of Basis Loaded. I am Joe Schmit, joined as always by Paige Driscoll, and we are coming to you from lovely Chicago, where the temperatures are mild, the days are getting longer, and we're filled with plenty of sunshine. What better way to celebrate than with the latest NDPSR report, starting with butter. This butter number coming in at 249.36 is a little bit of a surprise. That is a plus 11 to the CME 1 week average of 238. We traded 5 loads at the CME that week. So last week, you remember the CME dropped 26 cents. The NDPSR moved 30. Then after that 26 cents drop, the CME dropped another 15 cents. NDPSR up a hair. So a big surprise on this butter number. After negative basis last week, plus 11 this week, none of that sub 140 got in on the NDPSR. Now, the market has consolidated in the low 40s, so it'll be interesting to see what basis does in the weeks to come. On next to another surprise, blocks, 211.45. That is a plus 7 to the CME 1 week average of 204.45. Plus 7 is outsized basis. We did have lower than expected volume in the block, almost 1 million pounds under. Plus 7, a really good price compared to the CME average of 204.45. Now, the block has been bouncing around between this 2.5, 2.20. We do have a low week next week of $2. This higher than expected basis is certainly a little bit of a surprise and a win for the manufacturer, but as I said, not selling a whole lot of product at this elevated level. Up next, barrels, 186.32. That's a plus 7 to the CME 2-week average of 179.39. Now, we average 12 loads a week on the 2 weeks that I use here to come up with that 179.39. And these are the first 2 weeks of this range in the barrel between 173 and 185. 1 week it's low 70s, next week it's low 80s. We've seen a lot of oscillation between those two extremes in the barrel. So what does it all mean? Well, as this barrel price moves between 173 and 185 at the CME, on the NDPSR, we see them entrenched at this 186.30 level. This is the second week in a row that we've been at this 186.30 level. What's interesting, that plus 7 basis, that's above our 4 to 6 cent expected basis. And at that elevated basis level, the manufacturer was able to move 13.6 million pounds. So a little bit over our expected 13.5 million. So for the barrels, with all the volatility that we've seen at the CME, prices seem to be stuck here on the NDPSR in this mid-80s neighborhood, while the CME oscillates between low 70s and low 80s, barrel holding a consistent positive basis at this 186 level. Next up, whey, 44.30. That's a plus 6 to the CME 1 week average of 38.35. Now, we traded 19 loads on the CME, so that's a lot of weight traded at the CME. And those 19 loads pushed the CME weekly average down 7 cents. Here on the NDPSR, up a half. So that's consistent with the rest of this report, right? Prices at the CME, sales in the country just kind of shaking off the benchmarks. Here, of course, on whey, we don't really use the CME as a benchmark. We use prior week's NDPSR. This would be that December 24th value of 44.48. So the manufacturer did have to discount a little bit to achieve this 44.30 level, and in having to discount, still failed to move even 3.5 million pounds. So about 1 million pounds under our expected weight. So positive basis in whey, that could be a little bit of a win, but it would appear with 2 weeks at 3.5. Now, these are both holiday weeks, so maybe you can shake off the 3.5 million a little bit, but 2 weeks of lower than normal volume moved on the NDPSR would lead you to believe that possibly product is backing up, and that's why we saw this move from the low 40s to the low 30s on the CME. And then lastly, non-fat, 140.74. That represents a plus 6 to the CME 1 week average of 134.30. We did trade 5 loads on the exchange. Plus 6 is higher than normal basis, but of course lower than we have seen in recent weeks. So the manufacturer came off of this mid 40s level to move some product close to 141 and was actually able to move almost 18 million pounds. So this is pretty good volume for non-fat as of late. We had a 3-week run there on the NDPSR of substantially lower than expected volume, almost close to normal here on this last report, coming in with a weighted average of 140.74. So this is the first week of the January pricing cycle, currently getting January class 3 of 1969 and January class 4 of 2008. That higher than expected block and weigh really moved that January class 3 value higher. If you carry current equivalents at the CME out through the entire February pricing cycle, currently getting February class 3 of 2002 and Feb class 4 of 1960. So for the first time in recent memory, if prices hold at the CME, we will have class 3 trading over class 4 as it's supposed to. We'll see what they have in store for us in the weeks to come. Until then, I'm Joe on behalf of Paige. Thanks so much. Bye-bye.